Okay, good evening. This is Professor Mayer, and this is our 7th chat session related to internal auditing. I think we're going to have a very interesting session this evening. We're going to be focusing on chapters 12 and 13 and looking specifically about the engagement process. So in the engagement process, what we're talking about is what it is that we do as auditors. And so we've talked around it, but we haven't actually talked about what we actually do. And what I'm hoping to do is we're going to talk obviously about the material, but I also want to really talk about sort of all this from a very practical perspective. Okay? So there's two components related to auditing that we may in fact get involved. So the first piece is that we may in fact be doing what we're calling assurance services, and this essentially is sort of the meat and potatoes of what we do as auditors. By the way, we're on page 12.3 in your books. Okay, so this is an objective evaluation of evidence, and we're looking at this from an independent perspective. So this is kind of what we do on a day-to-day basis related to an audit. So within an audit is we are objectively looking at evidence at a very specific process. We'll talk about how we carve out those processes in a few minutes, but the idea is that we're independent and we express an opinion, and as we're expressing an opinion is that we are eliciting comments from management, and this then ultimately becomes a part of our audit report. Okay, so it's very important to understand this is that we are independent. So why am I focusing on this? Well, the other thing that we can do is we can actually do consulting services. So as an internal auditor, we in fact can consult with the various clients, what we call audit services. And again, this is sort of the meat and potatoes related to what we do in auditing, is we're expressing an opinion. We are, during the course of the audit, making recommendations, but we're not actually implementing these recommendations, okay? So even though we are part of the same company, we're still independent. Now when it comes to consulting services, this is something that we can do. However, the issue becomes is that we are no longer an advisor, or we're an advisor, but we're no longer independent. And in fact, in this consulting role is we may in fact be recommending and implementing changes. There's nothing wrong with that. And we'll be talking about this over the next, actually primarily related to in our next session. But the idea is in a consulting role is that we are separated from what we're considering to be an assurance role. So we need to make this distinction, is we can provide assurances from an independent perspective. We can work with management in terms of facilitating change. The problem is going to be is that if we are consulting and we're helping to facilitate this change, is we are basically sort of in a situation where it becomes difficult for us to audit the process going forward. And this concept that I think we brought this up before is you can't audit what you are managing. So as a consultant, we are part of management and we're helping management. So we will need to understand that we're not independent, and we need to understand that this then sort of creates complexities as we are moving forward in the future in terms of consulting, or in terms of actually working with the client from an audit perspective. Okay, so let's talk about a couple of things here. And I think so I actually skipped a page here, and we're actually looking primarily at page 12.5, and we're looking at the assurance engagement process. So we introduced this whole concept of consulting. We're actually going to revisit this, not today, but we're going to revisit this in our next lecture in 2 weeks. And what we're really focusing on now is an audit or an assurance engagement process. Okay? And focusing primarily starting on Exhibit 12.3 on page 12.5. First thing that we need to understand is the objectives and the scope of the audit. Now, I've had numerous discussions with many people related to what is essentially the appropriate level of a scope of an audit. And I've worked with organizations that for some reason believe that they should have a comprehensive scope that goes from what they would call soup to nuts in a department, and this engagement would take somewhere between 3 and 6 months. Well, that's not really what most organizations are doing sort of in the modern audit world. What I've determined based upon sort of my own experience and what other people have been telling me in terms of what they're trying to do is developing the scope of an audit and limiting the scope and limiting the objectives so that you can go through the process and issue an audit report and be totally completed within a month. Within a couple weeks, a month to 6 weeks, I think probably 6 weeks is probably the most that you want to do. If you could get in and out within 3 to 4 weeks, that would be much better. So the idea is the fact that if you, let's say you have a group of 10 people and you have a audit team, let's say you have 9 people and a director, so you got 9 people, so you have 3 teams, and each team is doing an audit every month. The idea is that you've got 3 times 12, so you got 36, probably somewhere between 30 and 36 audits every year that you are presenting to the board. This is much better than taking a look at, say, maybe 2 or 3 audits and trying to do some sort of comprehensive review and only presenting 2 or 3 audits within a year to the board. So the idea is that when we're planning the audit is that we need to think about, clearly we need to think about resources, but we also need to think about objectives and scope. And the idea in terms of objectives and scopes is that we want to limit the scope of the audit to the point that we can get in, we can understand the internal controls specifically related to this limited process, and then we can complete the audit and we're done with it. We issue the report, and we'll talk about this process over this lecture, but what I want to really focus on is the fact that the audit should be of limited scope. Now, someone may say, yes, but this is a much bigger problem that we need to expand the audit. And the answer to that is simply, I understand that. But what you want to do is you want to carve out specific pieces within the audit. So the idea is that if you're looking at a complete process that may take 3 or 4 months or 6 months to do, is that you've carved this out to maybe 3 or 4 or 5 specific individual audits. And then at the end of the complete process is you do some sort of comprehensive review and putting everything together. So we actually did this in our organization related to purchasing. We took a look at each individual facility, and there were 7 or 8 facilities in terms of the purchasing process. We then took a look at accounts payable and in each of the individual organizations. So within this 6-month period, we were issuing maybe 10 audit reports, and then at the end of it, we issued a comprehensive sort of review to sort of outline where everyone was within the overall process and controls and so forth. So the idea is sort of back to the planning phase in terms of the objectives and the scope, is we need to carve out a piece of it that is well manageable within a, and again, so the target is going to be, you have a team of 3 people, you can get in and you can get out, you have that audit report issued within a month. That may seem a bit aggressive, but it will do wonders for you from an audit perspective, because an internal audit department is viewed in terms of output. And what is your output? Your output is audit reports. So as I had mentioned a few minutes ago, as opposed to issuing 3 or 4 massive audit reports, is we're issuing 30, 35 individual reports, is that really does create value within the organization. Okay. Now, the next piece related to this is gaining an understanding. Well, we've kind of talked about this from a couple of different perspectives. If we were external auditors, in an external auditor perspective, is that what we would be interested in is understanding what we call inherent risk. So from the perspective of inherent risk, what we're looking for is what could go wrong based upon the nature of what we're actually looking at. So gaining an understanding from the auditor's perspective is absolutely critical. So because, again, keep in mind that many of the audits that you're going to do, you may be not at all familiar with the content area. But that's okay, because you understand the process. So part of the gaining an understanding is to go through a internal review in terms of what's on the website, what policies and procedures there are, maybe do some interview questions. The idea is that what we're attempting to do is to understand the process. So we understand the process, we understand the risks, and then this then becomes a part of identifying risks. Now, one of the things that we've actually have talked about this, and I want to kind of emphasize, is what we're doing in terms of understanding and identifying risks is a lot of the work that we do is that we are identifying the process and documenting the process. We're documenting the process through some sort of flow chart, and within this flow chart is that it becomes a very interesting tool in terms of understanding where the risk areas are. So when we're talking about this, is that we need to understand sort of the feedback mechanism that we have within our own audit department in terms of understanding the process, understanding the risks, documenting this, and then getting feedback, and so that we can then create a test plan. Now, we're going to allocate resources, conduct testing, evaluate the evidence, and develop the observations. We'll talk about this in much more detail as we're going through this. But kind of keep in mind that there are sort of these lines of demarcation, and there is a process. And whenever you're in an audit, you need to sort of understand where you are in the process. So where you are in the process is that we're attempting to understand what we have, determine what we need to test, certainly determine what resources that we need in regards to the testing, conduct the test. So once we've conducted the test, we're going to evaluate the evidence and develop our observations. So again, as we're going through this, we're going to get some more detail, but this is what you see is a very, very good beginning point in terms of understanding what's taking place. Okay. The last piece, and again, we're actually still talking on this piece here related to 12.5, and there's a lot of detailed information in the chapter, but this frankly is a very good sort of starting point for the discussion. is how do we actually communicate with the auditee? Okay, well, let's just sort of talk about this interim and preliminary communications. Well, once we have gotten our audit assignment, is we need to have a meeting with the key accountable executives as well as management. Okay, and the reason this is important is everybody needs to understand, number one, that the audit is taking place, number two, what the scope of the audit is, and just sort of some mechanics in terms of how long we believe it's going to take, what resources from the department that we need, and then what is sort of the continuing communication process. Okay, so it's absolutely critical that we develop these preliminary communications up front, because, and I've seen this in the past, is that we complete an audit, we issue the report, and the accountable executive says, well, what is this report? I have no idea you were completing the audit. Well, they probably were aware of it, but they forgot. Okay, and that's part of the problem with one of these audits that go on forever and ever, is that we need to get in, we need to communicate what we're doing, we need to do it, and then we need to get out. Okay, let's talk about the interim communication and then the final engagement communication. So we are communicating what's going to take place in the audit with senior management as well as the complete management team. But we're probably not going to be talking specifically with senior management during the course of the audit, unless there's a significant event. And we'll talk about that in a minute. But we will be talking with management through the course of the audit. It's critical that we understand that this communication is a part of what it is that we're attempting to do. And what it is that we're attempting to do is that at the end of the audit, at least the goal of the audit, is that the recommendations that we have are basically going to be self-evident. And what we mean by this is that the client is looking at this at the final audit report and say, yeah, we've been talking about this for the last 3 weeks, and we agree this is what we're going to do, and this is what is sort of management's response to the audit report. Okay? If that happens, that is what I would consider to be a near perfect audit. Now, once the audit report is completed, and again, it's not completed until management has reviewed the results and have been able to sort of vet their concerns and so forth. And the reason I say that this is so important is that if management is surprised by our results, the reality is that that is because we were not communicating with management. The last thing in the world you want to do as an auditor is to present this to the board of directors, have management there, and management says, oh, well, if the auditor would have communicated with me, I would have told him blah, 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 and that basically discounted the audit report. That happens. That happens. It doesn't happen if you're communicating with management. And sometimes auditors come with these conclusions that are just, frankly, wrong. They just are. And the only way you're able to sort of vet these through is by presenting to management in an early stage and let management kind of work through the process in terms of, yeah, that's not really right, but you're kind of on the right track and we'll kind of work together. And what I'm hopefully trying to communicate is that what we're attempting to do here is to partner with management in terms of creating an audit report, because what is going to be presented to the board of directors is the audit report along with management's response to the audit report. So in the audit report, we're identifying findings, we're identifying plans, recommended plans of correction, and management is presenting their response. Again, you do not want to go to the board of directors in a fighting mode with management. You just don't want to do this. And there's no reason to do this because, frankly, if you kind of accept the fact that management, again, if management is perpetrating some sort of fraud, all of this is off the table. These are significant findings, and we'll address these otherwise. But chances are management is probably doing a pretty good job, but they have the opportunity to improve. And if we are communicating the audit appropriately, they're going to understand how we can actually help improve the process. So we're looking for a partnership in relationship to management and the auditor as it is presented. Okay, so if you go to page 1210, I want to talk about some of our observations, okay? So in 1210, we are looking at observations. So the idea is that as we are observing things, is a lot of things we're going to see are not really reportable, that might be interesting, maybe as part of the background, but they're really nothing that is in need of correction. They just aren't, okay? So we may include this as part of the background. In fact, we may talk about these from the perspective of what management is doing right. So one of the interesting things related to the internal auditor is he or she is not necessarily there to tell executives, tell the board when management is doing a bad thing. It's just as good. In fact, it's unbelievably good from a sort of a PR perspective to tell the board of directors what management is doing correct. There's absolutely nothing wrong with talking about the positive things that management is doing. And if you can do that, then that's actually a very good thing. Got a new visitor here. Let me cut off. Okay, so cut that person off. Okay. Observations are, if you notice the observations is not reportable due to mitigating controls, and or it's suggested that the enhancement of the process does not have a significant impact. So the idea is that we're going to see little things. We may in fact tell management, you know what, you should maybe clean this piece up. We may in fact not be reporting these things. So there's a lot of things that we're going to see that, and again, not everything that we see is going to be reported, okay? So what we want to be reporting are these reportable observations and the significant observations. So again, going back to page 1210, reportable observations is these observations related to significant risks and the corresponding controls that do not reduce the risk to an acceptable level. Okay? These are the kinds of things that we want to be reporting to management as well as the board of directors. Significant observations are important enough to be communicated directly to the board of directors or to the audit committee. Okay? So when we talk about significant observations, these are the things that when we see them, and again, kind of visualize yourself as a auditor, audit manager, and you're kind of working through the audit, and at the end of the day, you're looking at this and you're saying, I think we have a problem. Okay, so you're going to communicate, you as a sort of a lead auditor in this group is not going to be reporting to the board of directors, but you're going to be reporting this to your chief audit executive. He or she is kind of going to be working with you in terms of defining what the issue is and how significant this is. Now, this will probably, before it actually goes to the board of directors, you will probably be having a conversation with an executive within the organization, explaining what the issues are and attempting to address these this way. Depending upon what the issue is. is you may in fact end up going directly to the audit committee and just say, you know what, we have a significant problem. And again, when we're talking about that significant, we're talking about some sort of fraud level that is to the level that maybe we don't trust anybody as we're communicating this. I've been involved in a number of significant observations. I've never bypassed senior management, gone to the board of directors. In every case that I've had is I've gone to senior management and explained what the situation is. In every case, they've basically agreed with me, and together we developed a plan of correction, and then this plan of correction was submitted to the board. So just kind of think about sort of the observation level disposition is we want to work with management as much as possible. We want to talk about good things that they've done. If they've done good things, that's a great thing. We need to communicate this. If they've done things that need to be fixed, we want to work with management and get these fixed. If we're observing things that would suggest that management itself is not doing the right job, is that we need to then work with our chief audit executive and figure out how we're going to communicate this to the appropriate level. Ultimately, if we believe that there's significant fraud or significant issues, we will go directly to the board. We may, in fact, be going to a higher level of management. And again, that's, in my experience, that's as far as I've gotten. I've never been in a situation working with management where I've said, you know what, this is so bad that I have to bypass everything and go to the board of directors. That may happen, but it hasn't happened to me in the more than a few years that I've done auditing. So, but you need to, obviously you need to understand where you are. Okay, so let's talk about our sort of continued process. So we're looking at the engagement objectives. And when we're talking about the engagement objectives, is what we want to consider is we want to consider what it is that we're attempting to do. Okay, so when we, and let's just kind of think about this from sort of a very, very practical perspective. Okay, so at the beginning of the year is the chief audit executive and the audit committee and a few other people get together and say, okay, well, you know, we're planning on doing these audits. So we've got, you know, 15, 20, 30 audits to be done during the year. So you've got an audit. So chief audit executive comes to you and says, okay, well, you're going to be doing an audit of whatever, and you need to get it done within the next month. Okay, so some of the things that we need to consider, and again, we're looking here, we've actually moved over to chapter 13, and in chapter 13 is on page 13.3, is we're looking at the reasons to conduct an engagement. So the question that we have, the question certainly if I was given an audit, and a lot of times I'm given an audit without a real clear sort of understanding of what this audit is, other than sort of a placeholder that says audit of receivables or audit of accounts payable or audit of fixed assets, whatever it is the first question that we need to understand is, well, why are we engaging the audit? Why are we completing this audit? What is our objectives? And then what we're looking for is, so we need to understand why we're completing the audit. Are we doing this because we believe, or someone believes that there's an audit risk? Or are we doing this as sort of a routine process where we're incrementally going through the organization? We're doing this audit because there is a new change, there's a change in the process, new management, new process, new whatever. Whatever the reason for having this audit as part of the audit plan is we need to understand that. Okay, and I will tell you, sometimes you're going to get an audit and you're going to start asking questions, well, why am I doing this audit? And the response is going to be, because it's on the audit plan. We don't know. We don't know. Okay, so sometimes you don't really know, but that's okay. So again, once we get it's kind of look at, so kind of visualize it from the perspective of we're writing a book. So we write a book, we have the title. So the title is the plan, and what we want to do is want to complete the details. So the issue becomes is, okay, so if we understand why we're completing the audit, or we don't understand why we're completing the audit, the thing that we need to consider next is, so what are the objectives? Okay, so we need to understand what the objectives are. Well, clearly we need to, and again, this should not be a reinventing the wheel every audit that we're doing. Okay, so what are the objectives? Well, the objectives are understanding the internal control process. The objectives are basically, again, looking at the next item here is defining the scope. And again, within the scope is we're looking at the boundaries of the process. So the idea is that if we say, okay, well, we're going to be looking at accounts receivable. Well, that could be, again, that could be a massive audit, or that could be very, very specific. So part of our sort of give and take related to objectives in the scope is if we understand that ultimately we want to get in and out within a month. Okay, so I think that's, if you can sort of use that as a takeaway in terms of what we're expecting to do specifically related to the audit, is if we're going to get in and out of in a month, then the question becomes is, what can we do? Well, what can we do? Clearly, we want to focus on the objectives. We want to define the objectives based upon what are the most appropriate things that we want to focus on. Okay, so if you look at the objectives, I just want to kind of go through this. So this objectives are 13.5, and again, we think about the title of a book. Okay, so the title of the book, 13.5 at the bottom of the page, going on to 13.6, is what do we have? Is evaluate the design adequacy of something. Okay, determine the operational effectiveness. So we've got design and effectiveness. Compliance with, so there may be a compliance audit. The effectiveness and efficiency of a business process. Accuracy, the achievement of goals, the performance of personnel, whatever the case may be. So the idea is that sometimes defining what the objective is defining what the title is of the book. So this audit is to determine the operating effectiveness of personnel as it relates to bringing on new employees. Okay, so we've defined a very specific process, and we've defined a very specific objective. And defining this objective becomes very important because that really is going to define the scope. So within the scope and the objective is we're going to carve this out in a very meaningful way. So if you look at the scope here on page 13.6, you're going to see a couple things here. Is the scope is the boundaries of the process. While some processes are small and self-contained, many are very broad and overlap with other processes. And frankly, what you're going to see as an auditor, and I see this all the time, is this concept of audit creep. So the idea is that we decide, okay, we're going to go in and we're going to do this audit of a process. Okay, so as we're going along in the audit, we say, oh, well, look over here. This is interesting. Let's take a look at this. And then we go over there, and then you say, oh, well, look over here. Well, that's interesting. And then we go a left turn going that direction. Then we go over there, and we say, oh, well, look over there. That's interesting. And we go over there. And this whole concept of audit creep sort of defeats the whole purpose of defining our objectives. Once we identify our objectives, we need to stick closely to those objectives. And if in fact we identify something that is beyond the scope of what we're attempting to do, well, that's okay. That just then creates another audit. Okay? And I've seen this. I've seen audit reports where that the auditor, you can kind of see him or her sort of meandering through the department or the organization. Oh, we got something over here. Well, that defines something else. Then we got something over here. Then we define something else that goes over there, and so forth. And these are the audits that sort of have no beginning and no end, and they end up being 30 or 40 pages, which nobody reads and creates no value. What creates value, and let's talk about the deliverables, is specific, concrete information that an executive can read in a matter of minutes and understand what the issues are. Okay, so in terms of the deliverable, the deliverable obviously is going to be the audit report. Well, the audit report needs to be basically predefined. Predefined meaning there is a specific flow to the audit. So again, if we are conducting 20 or 30 audits during the course of the year, is every audit needs to have a very specific flow. And the reason this is important is executives who are busy doing other things, and the last thing they want to do is to read an audit report, is able to get a 3 or 4 page audit report, read through it, and understand explicitly what the issues are. They're also going to read within this audit report what management's response to this is, and are able to, number one, understand what's taking place, and number two, if they don't agree with what's taking place, is to express their opinion. So the expectation from the perspective of management is that the auditor provides a very consistent process in terms of the audit. And I just can't overemphasize this, how important this is, because if you're not doing this consistent process, is management gets confused. Kind of visualize the fact that management is so busy with so many things that they're not able to manage what it is that they need to do on a day-to-day basis. So from an auditor's perspective, we need to provide evidence for them. We need to provide documentation for them that's consistent, that is concise, and that in 2 or 3 pages they're able to read this and understand specifically what's taking place. Okay? And I like this. This is actually on page 13.7, and 13.7 is talking about the 7 habits of highly effective people. Is we begin with the end in mind. I love that saying. So there's 2 importance in the end to consider to help validating the engagement objective and scope. Potential outcomes to test, outcomes of tests to be performed during the engagement, and the auditee's expectation regarding the engagement and communication. So the idea is that there should be specific expectations that management has related to an audit report. And I say should be, because if audit is doing a good job, is the auditor basically is communicating the fact that this is a short engagement. We get in, we get out, and we move on. Okay? We get in, we get out, we communicate to management, we issue a short audit report, and then we move on. Okay? The last thing that we want to have is we want, if that's the expectation, is all of a sudden we're doing an audit that we're there for 6 months. Okay? Doesn't work. So we need to have consistency. Now, there may be extenuating circumstances in terms of what we need to do, but we clearly need to understand this from the perspective that management, the only way that we're actually able to get to this point is by getting management to buy into the fact that there is a process, and within this process is that the output is going to be very, very consistent. Okay, so let's talk about some of the things that we need to do. So we've talked about gaining an understanding of the auditee. And we've talked about this from the perspective that as we get an audit, and again, kind of visualize the fact that we are an audit manager, audit lead, and our chief audit executive gives us a audit that says, okay, you're going to do this. Okay, so what is it that we're going to do? Well, we need to define what the objectives are. Okay, so what are the objectives as we are understanding the auditee? So if you look at page 13.8, you notice here it says, understanding the process begins with determining the key process objectives. This helps the internal auditor understand why processes exist, which will be important when identifying and assessing process risk controls. It should be noted that the engagement step aligns with the objective setting component of the COSO model, which is the integrated framework. So essentially we are looking at things from a control perspective. Okay? So how do we gain an understanding of the client? Well, we gain an understanding of the client through what I would consider three primary ways. Okay? So the first two primary ways is by observation and inquiry. Now, we've actually talked about observation and inquiry in a prior session, but observation and inquiry essentially is the primary way that we can understand the internal control process. Now, during understanding the internal control process is that we may in fact determine what type of testing that we're going to do. We are also going to be doing what we call specific analytical procedures. Specific analytical procedures are there to help us gain an understanding of what the environment is. Okay, so if you look at 13.11, is some of the things that we're going to do is comparison of financial information from prior periods, ratio analysis, current ratio, and so forth, comparison of financial or non-financial information against budgeted information. So again, as part of our audit of a process is one of the first things that I would certainly be interested in is, number one, is understanding the flow of people within the organization, a table of organization. I would also be interested in their budget. So we're going to understand sort of the quantity of the amount of people that they have, what kind of expenses they have, and understanding where the issues are there. But again, from an analytical procedures as well as our internal control analysis, is what we want to end up with is some sort of documentation related to this. So the documentation related to this is going to be probably a flow chart. Other things that we may be able to do are narratives, which are probably not as effective, and some organizations simply do questionnaires. Okay, neither of which are nearly as effective as the flow chart. So the flow chart is documenting the process. Okay, once we've documented the process, is we need to understand what we're calling risk scenarios. This actually becomes very interesting because what we're kind of thinking about here, and I'll tell you kind of how we address this, is the audit team would then develop a flow chart. They would develop the flow chart based upon their internal control testing, observations, inquiries, and would understand where the issues are within the organization. This would then be documented in a flow chart generally speaking, we would then work with management just to make sure that the flow chart was appropriate. Okay. Then what we would do is this whole risk scenario discussion is the audit team that actually developed the scenario would meet with the director, chief audit executive, other directors within the audit group, as well as other maybe specialists, and go through the flow chart with the idea that what we are attempting to do is to understand where the risks are. And this dialogue with the audit management team would be extremely critical in terms of understanding where we should be focusing on specifically related to our additional testing. Okay? We look at page 1323. We're looking at the developing the risk levels and defining process risk level risk. There are many ways to define risk. The optimal approach depends upon the culture and the risk language of the organization. And one of the things, and we talk about this actually in the next point here, is the risk tolerance. So the idea is within an organization could have a high risk tolerance. In other words, they're willing to accept a high level of risk as they are moving forward to their goals. There's a lot of other organizations that have a very low risk tolerance, and they're just not willing to accept any risk at all, or very little risk. Well, sort of this defines maybe the difference between an established not-for-profit organization and a startup company. So a startup company has nothing to lose other than deciding not to take risk. So their success is dependent upon taking calculated risk. Well, anytime you take calculated risks, sometimes they work, sometimes they don't. Hopefully they work more times than they don't, and the company succeeds. Well, that whole understanding of the audit risk tolerance of the organization, or the risk tolerance of the organization, is going to play into our evaluation of the risk and how we're actually presenting this to management. Because frankly, as we're presenting results to management, one of the things that we need to understand is the fact that, in fact, management has a perfect right to say, you know what, I appreciate your comments, but we don't believe that this is a risk that we should be addressing. Okay? Now, hopefully, as we are working through the client and understanding the situation, is that we're not going to be sort of hit blindsided by a comment like this, but we're going to incorporate this into the audit report. And again, the audit risk of an organization, absolutely critical as we are understanding how we're actually going to impact the future direction of the organization. This kind of goes back to our discussion related to enterprise risk management, is before we start talking about risk, is we need to understand the overall objectives of the organization and where they're moving forward. Just a fascinating discussion. And in fact, the core components of chapters 12 and 13 sort of define really what we're attempting to do as it relates to completing an audit. Okay. Now, in our next session, we'll be talking about communication, performing follow-up procedures, and so forth. But I think sort of the core of what it is that we do as auditors are really going to be defined in these two chapters, in chapters 12 and 13, which is why I kind of separated the sampling method from these other two sessions. Okay, so in any event, I thank you very much for your time and attention, and we will be talking again in 2 weeks.